Hello everyone. Today now continuation of sales and distribution, third chapter, security market. In securities market, my main outline is we will discuss about structure of the security market, who are the participant in the security market, primary equity market, public issue, secondary equity market, that is stock market, stock exchange, NSE, BSE, trading and settlement, how it is happening, buying and selling shares, stock market indices, SEBI regulations, stock market abroad, and should trading be regulated, government security market, corporate debt market, money market. Now, structure of security market in India. Security market under divided into equity market, debt market, and derivative market. And under that, it will be a government security market, corporate debt market, money market, option market, and future market. Participate in the security market. See, regulator is there, that is CLB, RBI, SEBI, DA, CA, DCA, and SEC and FRB. Stock exchanges are there, listed security are there, depositories, NSDL and CDSL are there, brokers are there, FII is there because FII plays a very vital role for buying and selling the shares and options futures. Merchant banker or investment bankers, mutual fund, custodians, registrar, underwriter, banker to an issue. Because various participant is there in the securities market. One venture capital, it is a very famous nowadays. Credit rating agencies, then your debenture trustees. Under the primary equity market, the public issues are there, then right issues are there, private placement and preferential allotment will be there. Public issue in India, approval, if required public issue in India, approval of the BOD is there, approval of shareholders, appointment of the lead manager, due diligence by the lead manager, appointment of other intermediaries like co-managers, advisors, underwriters, bankers, brokers, and registrar, preparation of the debt draft prospectus, filling of the draft prospectus with SEBI, and application of for listing in security exchanges. These are the public issue and filling of the prospectus after any modifications suggested by SEBI with the register of the company and promotion of the issue, printing, distribution, collection of appliances, statutory announcement, determination of liability of underwriters, finalization of allotment, giving of demat credit, listing of the issues. So various things is given in that. So public issue in the US, how it is happening. In the US, public offering of the both stock and bond are typically marketed by the investment banker who perform in the role of underwriters. Generally, the lead investment banker form an underwriting syndicate which other investment banker to share the responsibility of the issue. Book building. Book building is a method of offering shares to investors in which the issue price is not fixed in advance as is done in a fixed price offer, but is determined through the bidding process. So book building method is very important key how it is happening. Stock market in India. As of January 24, there are 23 stock exchanges recognized by the central government. The most famous is two, that is NSC and BSC. So in the most important part in NSC, it started working in 1994 and within a short period they emerged the largest stock exchange, surging the BSC with the 30 stocks and NSC with the 50 stocks. NSC. NSC is a ringless national computerized exchange. In this there is a two segment, you have the capital market segment and the whole debt market segment. So, trading member in the capital market segment through VSAT and the trading member in the wholesale debt market through the leased line. The NSE has opted in the order-driven system. All trades on NSE guaranteed by the National Security Clearance Corporation. They are only seeing that it is a very transparent system. BSC switched from the open outcry system in the screen-based system in 1995. Now it is again same. It is also trading hour is there. So jobbers play an important role on the BSC, and the jobbers is a broker who offer two-way quote, bid ask price quote. But both jobbers and broker feed their order, and the quote-driven system is there. That is now order-driven system. Screen-based system. screen-based system adopted in India refers to the open electronic order market. So in that, it is what will happen, buyers and sellers, their order on the computer, limit order and market order is there. Computer instantly try to match mutually compatible order on a price time parity, and the limit order book, the listed of unmatched limit order is displayed on the screen. So either we can put the limit order or market order to buy. Limit order book, the share it is given, like for example 500, 501. So buying price is like here 500, between 505 to 506, and the sale want to do the here. So what will happen here? Now, key your buyers and sellers is able to do. This is a limit order, limit price for the buying and the for selling. Settlement. Security transactions are settled through electronic delivery facilitated by the depositories, and presently the settlement rolling is T plus 2 days. Settlement cost was different, that is based on the delivery and transaction cost. Buying and selling of shares, locating a broker, placement order execution, and internet trading. Type of order. Just we talk about limit order and market order. Limit order, those who place limit order supply liquidity, and those who place market order demand liquidity. These two was very important. Limit order means what? Supply liquidity. And market order is based on your demand liquidity. Buying on margin. You can buy share on margin. This means that you provide a portion of purchase value as margin, and the rest is given by the broker as a loan to you. So that is very important. Margin system, generally it is happening in option selling. When you buy on margin, your upside potential as well as downside risk are magnified. So margin always taken by the skin, and they means started the margin system. So option selling, that time margin is required much. Short sale. This is very important. Short sale is a sale of shares that one does not have, and the short seller expects the price of the share to fall in future so that he can square his position at a profit. Of course, the price can fall, inflicting a loss on the short seller. What is MCX? BSE Sensitive Index, Bombay Stock Exchange Sensitive, properly known as SENSEX. Sensex reflect the movement of 30 sensitive shares from the specified and non-specified groups. The index for any trading day reflect an aggregate market value of the sample of 30 shares. On that day, in the relation of the average market value of these shares based on 1978 and 79, this means this is a value weighted index. The base price is 100. So from September 21, we have a construct full map. What is Nifty? S&P and CNX Nifty is popularly known as Nifty. It is constructed in stock exchange in India. The Nifty reflect the price movement of 50 stock top listed, selected on the basis of market cap and liquidity. So the base provided is this in November 3, 1995. The base value of the index has been set again at 1000. So the value is weightage index, and its market cap is weighted. So stock market indices around the world is Dow Jones, S&P 500, Nasdaq, Nikkei 22225, FTSE 100, IBEX. I section BEX index. IBEX is the most popular bond market in India. There is a two version IBEX total return index. This trade to total return, and the principal return index. The index movement net price in the market. That price quoted in the market exclusively acquired interest. Here the trust of SEBI's regulation in equity market, the primary market and secondary market is given. How it is trading is computerized, trading cost is lower, transparency enhanced, market integrated, globalization encouraged, many management is strengthened, speculation highlighted, settlement will be there in the electronic basis. So all the regulations is given of equity market. Then it is New York Stock Exchange. New York Stock Exchange, that is you're trading through a system broker or speculator, and broker link and how it is happening, buying, selling, and prevailing prices. Nasdaq. Unlike the NYXE, Nasdaq does not have any specific location. It's fully computerized market and consisting of many makers computing the electronic. It is a full electronic network on the floor of the exchange, and each Nasdaq company has computing market and dealers who make a market in the stock. So dealer post their bid and ask prices on the Nasdaq system, and the broker choose among the market maker to handle their trades. Then again ISE, Big Bang 1886. They have a UK and Ireland. So emerging, this is the single electronic market is there and stock market quotation is there. They are working. So order. This is again order driven system. Tokyo Exchange is there. First 200 most is traded, and trading is the largest stock in the first section on the floor of exchange. And here how the regulation is happening. Government securities market. So introduction of auction based price determination, how you develop the RBI different system, introduction of the system of primary dealers, creation of wholesale market segment, introduction of DVP for settlement, delivery versus payment, increase the number of playlist, establish the guild oriented mutual fund. So many mutual fund now it came, and it is good actually, and emerging of the self regulation bodies such as Primary Dealers Association of India and the fixed income in the money market. So here primary market for government is GSEC. It is a Reserve Bank RBI done by the RBI, which serve the merchant banker to the central and state government, and RBI announced the GSEC through the press notification, and they have French auction, Dutch auction. French auction means successfully bidder pay the actual price or yield the bid, and Dutch means they cut off the prices. Then participants in GMX market is a mutual fund, provident fund company, trust, and RBI regulation is there. And primary dealers are important intermediaries in GSEC market. Secondary market again is deemed the listed, and it is also listed, and two kind is there: repo trade and non-repo trade. And corporate debt primary market is also broad meeting and is there AGM, and the credit rating system is there, finalization of the initial term to be used, and listing agreement is there, SEBI approval, and acceptance of participant of money or advance deposit to issue, allotment of issue. Then it's many things is there, because now actually security market is very important. So you should know what is primary market, secondary market, how the BSC and NSC work in India, because we are the now for fifth largest economy is there declared, and our market capitalization is much, FII investment is much. So these all things is related. Our Indian market is growing. Private placement is there. Money market again is a short term market, and is a less than a year. So comprises the call and notice market and repo market, the debt instruments such as treasury bill, then your certificate of deposit, all that is there, which is a less than a 1 year. So money market does not exist in a specific physical location or follow the set of rules or post or a single set of prices. Rather, it represents a web of browser borrowers and lenders linked by telephones and computers dealing with a short-term debt fund. Repo market. In the repo transaction, two parties exchange security, the cash stimulus agreement to reserve and transaction after a given period. The repo represented the collaboration short-term trading, and it is also decided by the RBI. So they are only fixing the repo rate, and based on that, in the repo market, the party which lend securities borrow cash, and it's said to be doing the repo, and the party which lend cash is said to be doing as a reverse repo. T-bill, treasury bill market, short-term debt instrument of the central government. And here the auction process is there, and the calendar announced by RBI. Treasury bill are issued at a discount and redeem at par. And most buyer of treasury bill hold them till maturity, and hence the secondary market activities is limited. So now I am finally the summary is the first we discuss about the security market is a market of equity, debt and derivatives. Equity market has two segments, the primary market and the secondary market. Primary market is a new issue market like IPO they're launching, and secondary market is a stock market. So in under that two huge thing is there, that is BSC and NSC. There's the four way in which a company may raise equity capital in the primary market. That is the primary issue, right issue, private placement and preferential allotment. Secondary market is a organized stock exchange through internet, and that is a fully transparent, and the principal stock exchange in the India is NSC and BSC. The key feature of the stock market transaction in India are screen-based trading, electronic delivery, and rolling settlement. And the major stock exchanges in the world is New York Stock Exchange, Nasdaq, Dow Jones, S&P 500, Tokyo Stock Exchange, many more. The general market movement is measured by the stock market indices. Sensex and Nifty are the two most popular stock indices in India. GSEC market is the largest segment of the debt market. GSEC are issued through auction mechanism, and the transaction of GSEC settlement delivery based on the mode. The wholesale secondary market is there, and the how the money market is a short-term fund comprises the call and notice market. All that is there. The maturity will be the less than a year. So the security market is very important, and that is governed by the RBI and SEBI. So in India, now many investors are there. So now it is a trending thing, stock market after COVID. Due COVID time only the many people start. So you should have some brief knowledge about the Indian financial system and what is primary market, what is secondary market, how FIs work, and uh, other stock exchanges out of India, how they are working. So these things are very important for your knowledge. So thank you.